Hello, I'm Lance Zimmerman with the CattleFax closing bell for Friday, September 16th. U.S. corn crop conditions have commanded the attention of cattle and corn producers alike in 2011. A mostly underwhelming 2010 corn harvest left U.S. and world stocks depleted and pushed corn futures prices to new record highs in April and June. The current crop has been threatened by adverse growing conditions from the start. An unseasonably cool, wet spring delayed plantings throughout most of the Midwest, leading to slower planting progress in major production states like Ohio, Indiana, and Illinois. In the Central Plains, planting conditions were more ideal. However, drought quickly crippled the crop in smaller production states like Kansas and Missouri. River bottom cropland in Nebraska and South Dakota was also threatened by flooding due to a wet winter and spring in the West. Finally, a warmer and drier summer reduced yield potential in nearly every corn-producing state. Industry analysts have been forecasting yield for the 2011 crop throughout most of the summer and fall, with estimates ranging from 143.3 to 151 bushels per acre. The September crop production report from the USDA estimated yields at 148.1 bushels per acre. Also, the good to excellent crop rating for the U.S. corn crop started moving steady to higher in September. It's likely that the final crop yields reported in January will be somewhere between 147 and 151 bushels per acre. Based on current market expectations, it seems likely that corn futures prices will trend between $6.75 and $7.75 per bushel for the remainder of 2011. Now, your weekly commodity markets. Fed cattle prices were mostly steady to $1 lower this week. Live cattle sold at $118 early, but prices moved to $117 per hundredweight later in trade. Dress sales occurred at $184 to $187, and volumes were light in most regions. Boxed beef values rallied $2 to $5 this week, depending on quality grade. Last week's higher fed cattle market motivated sellers to adjust wholesale beef prices higher. Volumes were moderate, but they slowed late in the week due to the higher price levels. Movement of stocker cattle began in the north, marking the start of the fall run. Feeder cattle prices were steady to $2 lower on the week, while calves were mostly $2 softer. Slaughter cows were $2 to as much as $6 lower, with an increase in slaughter numbers pressuring prices lower. Corn prices moved slightly lower with the beginning of harvest in the southern Corn Belt. Also, analysts were concerned that higher asking prices were slowing demand. Thanks for watching. Remember to visit CattleFax.com for your latest market news and analysis.